For today, and in our first conversation today, West Africa's cocoa market is adjusting to lower farm gate prices after both Cote d'Ivoire and Ghana cut payouts to farmers in response to softer global prices. As the region navigates shifting market dynamics, trading firms are positioning to capture new opportunities across the value chain. Sunbeth Global Concept has exported over 200,000 metric tons of cocoa since 2017. The agro-commodities trading company is seeking 100 billion naira through a commercial paper issuance, part of a wider 200 billion naira funding program to expand its footprint. Chuma Ajene, investment and strategy advisor at Sunbeth Global Concept, joins me now to unpack how the company plans to navigate Africa's evolving cocoa trade landscape and seize the growth opportunities. Thank you so much for your time today, Chuma. And let's first start with the big picture here and look at what's happening globally and bring that into how that impacts the cocoa market. And let me get your take on what you're seeing in terms of, supply chains and how this the war we're seeing play out between Israel, the United States and Iran could impact cocoa prices.
Thank you, Kenneth, and good afternoon. It's certainly very interesting times at a global scale. Ultimately, in the commodity space, it's about supply and demand. Clearly, what we see happening in the Middle East and what it's triggering in terms of effect on our crude oil prices is ultimately fears that supplies will be significantly constrained. As it relates to cocoa and any other commodity that Sunbeth trades in, ultimately, our goal is to match suppliers with people who demand those products, and irrespective of price and the volatility associated with that price, as long as we continue to play that intermediation role effectively, which Sunbeth certainly continues to do, we should certainly be able to perform as a company, irrespective of where the prices go.
Yeah, because we've seen quite some adjustments come from Cote d'Ivoire and Ghana, and more recently cutting farm gate prices there. And I'd love to get your take on how, one, you're reading the cocoa market right now, and more or less how this shapes your investment strategy. Yeah.
So over the last few years, cocoa has faced particularly significant constraints when it comes to supply. Today, and has been the case historically, Cote d'Ivoire and Ghana has made up over 50% of global supplies. Now, in those countries, there have been significant constraints around supply, having to do with just efficiency in production, having to do with, in certain particular cases, diseases that affect the supply of the crop. But today, right, we're seeing that prices have come down because those supply issues have gone away. And ultimately, the demand side of the equation has also transformed or adapted for higher prices. And ultimately, we've seen prices come down. The supply continues to grow across the West African region, including in Nigeria. So prices have come down. But Sunbeth, as I mentioned earlier, is an intermediator, certainly looking to make money through the cycle, and it's something that the company has continued to do. In terms of outlook, in terms of what has happened in Cote d'Ivoire specifically, and prior to that, Ghana, yes, the various government authorities in charge of setting prices have brought prices down towards market rates. Ultimately, we think that contributes to price stability, and it reduces volatility going forward. The market had been out of equilibrium for a while, right? And the steps that the government is taking in Cote d'Ivoire very recently is certainly supportive of that.
More or less some correction happening there with the prices.
Absolutely.
But let's look beyond cocoa now and see the opportunities you see in other adjacent commodities, the streams that are coming in there, and as an organization, how you're looking at it to tap into some of those opportunities?
Yeah, so the first thing that Sunbeth is doing, which I think is really, really transformational and positive for the company going forward, is moving away from just purely trading agri-commodities, but specifically looking to capture more of the higher margin play in processing. That is a potential game changer for the company because it allows you to, again, market higher value products. It allows you to capture higher and more stable margins. Incidentally, when prices fall, one of the biggest beneficiaries is companies who do processing of those commodities. So by vertically integrating into processing commodities, which is what Sunbeth is planning over its 5 to 6 year strategy, it certainly will be a higher margin, much more profitable business on a forward-looking basis.
Yeah, because we're looking at these elevated prices for cocoa right now. I can imagine, for different organizations like yours, I can imagine that working capital needs have surged in this time, yeah. But how are you managing that pressure while keeping your balance sheet healthy?
Yeah, so working capital has always been something that has managed through the cycle. I mean, with prices coming down, clearly the business has shown a very demonstrable track record. If you look at last year's financials, the year before, revenues have continued to grow irrespective of the volatility, particularly downward volatility in cocoa prices, as well as some of the other agri-commodities. What Sunbeth is doing when price is dropping is that it's focusing on growing volumes. And to grow volumes, you certainly need to continue to source working capital, particularly flexible working capital. So in coming to the commercial paper markets across 3 tenors, 180 days, 270 days, and roughly 360 days, what Sunbeth is looking for is flexible capital to be able to maximize its ability to continue to grow export volumes, ultimately processed volumes. And certainly, if it continues to do that as a business and continues to maintain the growth trajectory, that should fall through to the bottom line, which will, support the business's needs to continue to service its obligations.
But I'm curious to know why short-term capital was the right move for Sunbeth at this stage of your growth.
So as we think through what Sunbeth is doing with that working capital, it's ultimately trading. The trading cycle, 90 days, in some instances, 120 days. So it's about matching the needs of the business to the funding that the business needs. Technically, Sunbeth can go out for longer term funding, but that will support some of its capex requirements. The working capital that Sunbeth is seeking today is purely for working capital, not for investments into capital expenditure.
All right, but in terms of the appetite you're seeing from investors, speak to what sort of insight you've gotten from this process.
It's been really good. What's fantastic about the Nigerian markets is that people understand value. So if you look at the yields that Sunbeth has come out at relative to risk-free rates from the Nigerian government, you'll see that the Sunbeth commercial paper is very well priced. And I think investors understand that. Also, Nigeria, as a community, is moving forward into non-oil exports. So Sunbeth has been able to tell its story very articulately around where it sits within the overall macro theme of pushing exports out of Nigeria beyond oil. And I think investors really, really like that story and are taking a liking to, pushing out support for Sunbeth in relation to funding to support its growth.
Yeah, because every commodity cycle has its risks, whether it's price swings, whether it's FX volatility, whether it's policy changes here. But I'm curious to know how you're stress testing your strategy against these scenarios.
Yeah, it's about hedging. So, Sunbeth as a company focuses significantly on risk management. It has a treasury team out of London, also a treasury team based out of Lagos, and they are coordinating quite significantly to manage the price volatility in the various commodities that Sunbeth trades. There's a futures market, particularly for Sunbeth's main product, the product that it sells, which is cocoa. Sunbeth buys from local buying agents in Nigeria who ultimately are buying from the farming communities across Western Nigeria in particular. And as it buys, it's hedging those risks in the futures market, which is available in Chicago and in many other places in the world. So in mitigating by hedging through futures and also matching contracts between buyers and sellers, as I mentioned earlier, that's one way to make sure that the volatility in prices are something that the business can continue to perform even through those price cycles.
Yeah, but from a strategic standpoint, we understand that looking at the market now, Nigeria is still exporting mostly raw cocoa beans.
Yeah.
And as someone into strategy in the agro-commodity space, I'm trying to imagine that value capture is quite big in your long-term plans. Yeah. And I'm curious to know how you're looking to capture more value in this market.
Yeah. So at the moment, Sunbeth has already begun plans to construct greenfield processing plants in both cashew, cocoa, and a couple of other commodities. As I mentioned earlier, processing not only allows Sunbeth to capture higher margins, it also allows for a lot more stability in the business going forward. Because in processing, you really do capture value, but also you have a higher bargaining power, particularly when it comes to off-takers. So in moving into higher value processing, Sunbeth is certainly diversifying and strengthening its business model.
Yeah, but in terms of that business model, then what then needs to fall in place for you to get more value in this cocoa industry? Is it more infrastructure? Is it more policy clarity or policy changes that need to happen, or is it long-term capital that should come into it?
So on the policy side, I would say the Nigerian government, including the Central Bank of Nigeria, has done extremely well in putting in place a framework that is supportive of great agricultural exports. So I think from that perspective, there are significant tailwinds for Sunbeth. ultimately it comes down to the business improving its access to capital. And that's why we are diversifying beyond the typical commercial bank funding. We're diversifying beyond the typical developmental financial institution funding, both locally and internationally. And we're opening the gates to the capital markets to allow public investors, particularly qualified ones, to come in and be part of this story of supporting, the growth of a business that is looking to promote agriculture in a significant way in Nigeria and actually West Africa as a whole.
But looking further down the line now for your company, what's the bigger priority for Sunbeth?
I would say definitely the processing, the focus on processing going forward, I think, is going to be a strategic imperative. Access to capital markets certainly enables that. Risk management has to be a continued focus on a business that is operating in an environment like the one we find ourselves today, that is prone to shocks, right, particularly arising from what's happening in the Middle East. So there's certainly a number of competing priorities, but the leadership team there is certainly looking to balance all those out in a way that ensures that the business continues to grow in a stable fashion.
Definitely keeping an eye on this market is one we're looking at quite clearly. Chuma Ajene, the investment and strategy advisor at Sunbeth Global Concepts, are talking about the outlook for the markets here. You're watching Closing Bell West Africa. When we return, we track the latest developments on the U.S.-Israeli conflict with Iran and its impact on emerging markets.